Hi, I guess it's no wonder a lot of people reach out to me and ask me questions about working with investors to help them get in the self-storage business or grow their self-storage business. I guess it's no mystery why that happens, because I have used investors and I wrote about it in the book, Creating Wealth Through Self-Storage. Hello, my name's Mark Helm. I'm the author of Creating Wealth Through Self-Storage, and I'm the creator of the Self-Storage Quick Start Academy. And I help small investors who want to get in the self-storage business, or small investors who want to grow their self-storage business strategically do so in a way that creates true wealth and a fulfilling career. And I used investors to really help grow our self-storage portfolio. So I guess I attract people towards me that are looking to use investors themselves, and it's no wonder I get so many questions about it. So let's talk about working with investors, and let's talk about what investors are really after. What are some of the benchmarks that investors are looking for if they would consider you and your self-storage business? When I got into business, I had one or two partners in a couple of the first projects I had, and I quickly got to the end of what I could do with the amount of liquid cash that I had. So I owned a large percent of a couple of facilities. Now, I could have been very content with that, but I wasn't, and I made the decision that I wanted to grow my self-storage business. So I'd rather have a smaller percent of a larger portfolio over a larger geographic area than a smaller percent of a few self-storage. Not that one is better than the other, that was just the choice I made. So in order to grow my portfolio, I had to figure out and learn how to connect with investors and use investor money to grow my portfolio. And that's what I want to talk to you about today. What are some of the things investors are looking for if they would consider you and your self-storage project? See, investors go through spaces. I don't think there's a formula for what to show them and how to show them something, because every investor is different, just like you're different. But my experience after having probably hundreds of meetings is there's some spaces investors go through, and those spaces are very common to all investors. So I want to talk about that and address those spaces, so as you're organizing your deal and your deal points, be aware of these spaces as you put your deals together. And also, I would like to say, use the meetings with investors not only to present a potential deal to them and possibly have them invest with you where you can use their money. You're interviewing them. They're interviewing you. Believe me, it's a lot easier to get in a partnership than it is to get out of a partnership. You want to make sure that the people that you are partnered with are people that you will have a long-term positive relationship with, or at least you think you will. Look, you put the wrong people in a partnership, you're going to create a business that very soon you're going to wake up in the morning and not want to go to work in. Your partners are critical. Interview them and let them be interviewing you. Now, with that said, let's talk about the spaces that I've seen that investors go through. The first space is the self-storage story. Frankly, most people who invest money in real estate deals or in the market don't really know the self-storage story. It's critical that you know it, you own it, and you live and breathe it. And self-storage is absolutely, and you probably know this, the absolute best, safest investment an investor could possibly consider. The amount of capital expenses below the net operating income line are minimal. You can project your cash flows very accurately. It's literally a steel building with a concrete floor generating office type or apartment type rents. It is the lowest foreclosed on asset class there is. I mean, know the self-storage story. Be able to talk about it for a half an hour if you have to. And what will happen is investors will quickly get that self-storage is a safe investment. If you're not clear on the self-storage story, Google it. Google the history of storage, watch many of the free blogs that I have on the website, Creating Wealth Through Self-Storage. You probably know it though, or you wouldn't even be here and watching this or reading this blog. But know that story. And here's the thing, investors, it doesn't matter how sophisticated someone is or how unsophisticated someone is. Human beings live in stories. They are not going to invest with you unless there is a compelling story of why they should. Every one of us thinks we're analytical. Every one of us thinks that we're logical and we look at the facts and we make decisions. That isn't true. Every one of us, every investor is going to make an emotional decision to partner with you and invest with you. And it's the story and how energized you are when you present that story and that will determine whether they invest with you or not. The first space, and maybe even the most important aspect of the whole thing, is the self-storage story. The story of self-storage, why it's so good, why they would be safer taking their money or a portion of their money and putting it in self-storage. Once they get it, I mean, and it doesn't take long, you will actually see a physical change in the face and in the body of someone once they really get it. Something loosens up and softens up, and in the instant they get the self-storage story, the very next instant they're looking at you and they want to know, well, what do you know about storage, and can I trust you with my money? So very quickly, the very next space is your story, and your story in the self-storage story. If you don't know what it is, you create your story in it. You know, many of you know my story. I was a commercial real estate agent. I was working primarily in the office sector. I had a company that managed office buildings. I sold them, I leased them, we managed them. And then I went out and worked with a acquisition director of a self-storage REIT. And I quickly saw that self-storage had all the benefits of a great real estate investment, but it had none of the risk and the downside that like the office buildings I was managing had. There were virtually no capital expenses. We would manage office buildings very well, but still we great NOI, but if tenants moved out and we had to pay commissions and tenant improvement, you know the story. But I know that story inside and out, and when I'm working with an investor, they get that I know investment real estate and they get that I know self-storage. And I created my story inside the self-storage story. So those are the first two spaces that investors need to go through. They need to understand self-storage as an asset that's great to invest in, and they need to know you are someone who knows what they're doing around self-storage. Now, I never say this to investors, but before I have a meeting, this is what I create for myself. This investor may or may not invest with me. I may or may not want to be a partner with them. But when they leave this meeting, they are going to know that self-storage is the best real estate asset that they can invest in. And they are going to think, every time they think of self-storage, they're going to think of me. That's how I go into each meeting. That's the intention of each one of these meetings. And I basically create myself as the go, but when they think of self-storage, they think of me. And here's what most investors are after. They're after security, and they're after an above market return. So if somebody's trying to double or triple their money, if somebody's trying to create a lot of wealth with real estate, they're not an investor for you. They're someone who should go out and buy their own self-storage facility and raise their own money. Our investors, and what the investors that you're going to look for, are people who already have their wealth, and their main mission is to protect it and to watch it grow. And it's usually in that order: protect it and watch it grow. And what you want to be offering them, or what they want to be hearing and what they will be listening for, is, one, is my money safe with you? And two, will I get an above market return? An above market return is above the S&P 500 or the Dow Jones 500, above the stock market, and the stock market's usually measured by the S&P and the Dow and the NASDAQ. So that's what we want to be offering these investors, and they want to feel like they can take a portion of their money, put it with us, and put it in self-storage, and it'll give an above market return, and it'll be safe. And it will. If you structure the deals right, it will be. Self-storage is probably the easiest asset class to give that to an investor. You know, stories are what every investor, and stories are what every human being lives in. I mean, think of the famous people you know. Think of Tony Robbins. If you know Tony Robbins, you know Tony Robbins' story. Running on the beach that afternoon, plopping down in the sand, not getting up till he reinvented himself. Every one of us has a story. Create your compelling self-storage story, and create your compelling story about you that links you in self-storage. Because once they get self-storage, and once they get, you know what you're talking about, and you occur trustworthy and knowledgeable to them, then and only then will they begin to look at the particular deal that you're offering them. Here's the next space to quickly get to in a presentation. The next space is, what do they get? Look, you can begin to present the deal, but most investors aren't going to hear it. Because once they get self-storage, once they get you, the next thing that they're thinking is, what does this guy want from me? So the very next space I move to is the deal points, what the investor gets. And I do it very simply. I mean, quickly tell them what you want from them and what they're going to get. It would go something like this. I'm going to show you a project in a minute, and what we're doing is we're raising 25% equity from investors. We're going to give you a 10%, an 11%, 12%, whatever you come up with. We're going to give you a 11% return while your money's in the deal. We anticipate your money being in the deal 4 to 5 years. At the end of that time period, we give you all of your initial investment back. You will have made 11 or 12% in it. You still own 30% of the deal and get 30% of the ongoing cash flows and 30% of the sales proceeds. Whatever your deal points are, tell them up front quickly. Why? Again, they will not hear anything else until they know what you want from them, and then what they will get from you. So quickly go over the deal points, because once they get that and they know that, they can set that aside and really focus on the deal. Until they know that, they're not going to hear 1/10 of what you're telling them. Cover that next. And then the next space is whatever deal you're presenting them. Now, the mistake that I make, and I still make this mistake, is I get really lost in the details very often. You know, I'm living and breathing. You're living and breathing this deal. You know it inside and out. They don't. Most of them don't want to know it inside and out. As you're making your presentation, one thing you're listening for is, how detailed is this guy? What does this person want to know about the deal? My mistake that I have made way too often is I start getting, because I have a lot of pages, I've analyzed the deal inside and out, I can talk about any aspect of it, and I get really lost in the details, mostly trying to impress that investor. And they get confused. Do you know what someone does when they're confused? Nothing. they do nothing. So if they're confused about your deal, they will not invest with you. So I would start with a very high view of the deal and then let them ask questions that bring you downward and into the details. And a very high view of the deal would be something like, we've got this project here, show them pictures of it. We've got this project under contract for $3 million. We think we can add another 25,000 square feet for $1 million more. We'll have $4 million in it. The moment we think 85% stabilized occupancy, and when we hit stabilized occupancy with the new space, we think it's going to be worth $5.2 million. So we will have made $1.5 million in equity, and they will be getting a 13.5% cash on cash return. So it appears like it'll be very easy to hit that preferred return that you will be needing, whatever the deal points are. And then maybe show them the 10-year cash flow page. But let the investor take you down into the details of it. Let them ask you the questions. Now, you can give them a package full of details that they take with them, but talk about the deal in as general terms as possible. Let them pull you towards the details. I have found that makes a huge difference. And what's really surprising to me is how many investors really don't want to know the details of where they're putting their money. Here's what I've learned, and here's what you'll find out if you haven't found out already. You bring 1 or 2 investors in the deal, they will bring many of their friends. People want to invest where their friends invest. If you've got some investors, their friends are going to bug them to find out about that deal and will be dying to meet with you and invest with you. At least that's the experience I've had. Many of those people, frankly, aren't that interested. They want to put their money where their friends put their money. They like what their friends do with their money, and they want to copy them. So just know what an investor will be listening for. They want to know, what do you want from me? How much money will I give you? How safe is my money with you? Can I trust you? If you know what their questions and their objections are, you build those into your presentation. You won't say, I'm trustworthy, but you will talk about other deals you've done, other partners you may have had, whatever you would say that would convey that other people have faith and confidence in you, and you're someone who can be trusted with other people's money. Because the first thing they want to know is my money safe with you? And then they want to know what they're going to earn. What is the return? Now, when most investors say return, what they're talking about is their cash on cash return. If I give you $100,000 and you give them $12,000 a year, that's a 12% cash on cash return. And then they want to know, what is the risk of the deal? The tendency is for most people in our position making a presentation, we tend to avoid talking about the risk. Don't do that. Talk directly, talk straight about what the risks are. Most of the time the risks are that someone else is going to come into your submarket and going to build more space, and everybody's occupancy will go down. I mean, most of the time that's the real risk. Talk about that, address that. And tell them how you have addressed it. I usually say something like, usually the risk is that more self-storage will come in the sub-market. Here's what we do. We get a feasibility report. We will know during the due diligence period the supply-demand of that market, how healthy that sub-market is, and we'll also know the risk, what is the barrier of entry for someone coming into this market? Is it high? Is it low? We will be able to assess the risk together of how easy it is for somebody to come into this submarket. And I address the risk right up front, talk about it. Because why? Because I know they're wondering what it is. You don't talk about it, they're going to go research it on their own. Address it directly. If they have any questions, address it directly. You might not know all the answers, but you will get the answers. Every now and then I have investors ask me what is the internal rate of return, the IRR. Know what the IRR is. The Storage World Analyzer will tell you what the IRR is. Here's what are some of the benchmark numbers. I'm not going to tell you what to offer your investors or what the deal is. I'm just going to tell you the investors I work with. First of all, they want an above market return. Typically that's 9, 10, 11, 12 above market return, cash on cash return. If they are looking at IRRs, typically kind of 20 is the benchmark number. We usually do ours over a 10-year period, so 20% internal rate of return over a 10-year cash flow period is not that difficult to get. So that's usually kind of the benchmark number they're looking at. And they're looking at what is the risk of this deal? How risky does this deal appear? One last piece of coaching here. The tendency is, if they ask a question, to give them what they want so that you can have access to their money to do the deal. Don't be like that. Don't overpromise. Very often, investors are going to push the envelope to see how far they can go so they can see what you will react to and what you'll say yes to and what you'll say no to. Don't promise something you're not convinced that you have at least a good shot of giving them. In other words, if you look at the cash flow sheet and you can pay an 11% return very easily, and they say they need a 14 or they won't do the deal, and you don't think you're going to get it, don't tell them you will. Be straight with them. Let them know what you can do and what you don't think you can do. They will respect you a lot more. And very often, they might not even be wanting it. They want to see how you react to it. And if you promise them everything, they're not going to be investing with you because they don't feel comfortable with you. You will lose whatever trust factor you've created. So be clear what the deal is, what the limits are on the deal, and what you can offer and what you can't offer. So next week, what I want to talk about is some of the mistakes I've made with investors and how to have good ongoing investor relationships. Because for some of us, how fast we grow our portfolio and how big we grow our portfolio will be a function of how well our investor relationships are. So we'll talk a little bit more about the relationship itself. So I hope this has been helpful to you, and thank you very much. My name's Mark Helm. I'm the author of Creating Wealth Through Self-Storage, and I'm the creator of the Storage World Analyzer. Fantastic program for projecting the cash flows and analyzing the deals that we present to our investors. Every one of our investors sees the reports that the Storage World Analyzer presents. Maybe your investors should too. Go to storageworldanalyzer.com or creatingwealththroughselfstorage.com. Find out more about the Storage World Analyzer, the most powerful tool in our self-storage briefcase. I'll see you next week. Thank you very much.